In 2024, an AI trading algorithm made a decision in 40 milliseconds. No human reviewed it. No human could have. That single decision moved $2 billion. Somewhere, someone had already decided that was allowed to happen. That person isn't a coder. They're not a trader. They're the one who draws the line between the AI can do this and the AI absolutely cannot. Hi, and welcome to Mnemosis, your career intelligence podcast. Here, we explore the jobs of tomorrow, their real-world impact, future demand, and where the global job market is heading next. Let's dive in. An AI risk assessor is the person who decides how much freedom an AI system gets and how much it should never have. In finance, AI now approves loans, flags fraud, prices insurance, and trades stocks, often faster than any human can follow. That speed is powerful. It's also dangerous. The AI risk assessor's job is to ask the questions no algorithm asks itself. What happens if this model is wrong? Who gets hurt? Can we even explain why it made this decision? They're not against AI. They're the reason AI gets trusted enough to be used at all. Think of them as the seatbelt, not the brake. This role sits at the intersection of three worlds: finance, data science, and regulation. Talking about education, most come from backgrounds in finance, statistics, economics, or computer science. A growing number now holds specialized certifications in AI governance and model risk management. Talking about knowledge, you need to understand how machine learning models actually work, not build them from scratch, but know where they can fail. You also need fluency in financial regulation, things like model risk frameworks and emerging AI-specific compliance laws. Talking about skills, critical thinking is non-negotiable. You're constantly asking, what's the worst-case scenario here? Strong communication matters too. You'll translate complex technical risk into language executives and regulators can act on. As a matter of experience, many enter this role after years in risk management, compliance, or data analytics, then specialize as AI adoption grows. This isn't an entry-level job. It's a pivot point for people who already understand risk and now need to understand AI. Let's put vague job descriptions aside. Here's what actually lands on their desk and leaves it. They create risk assessment reports that determine whether an AI model is safe to launch. They build model monitoring frameworks, systems that watch AI behavior in real time and flag when it starts drifting from expected behavior. They write governance policies that become the actual rulebook a company's AI must follow. They produce audit trails, documented evidence that shows regulators exactly how and why an AI made a decision. And in moments of crisis, they deliver incident reports, clear, fast breakdowns of what went wrong when an AI system fails and what stops it from happening again. These aren't theoretical tasks. These are documents that get read in boardrooms, frameworks that get built into live systems, reports that regulators use to decide if a company keeps operating. AI in finance isn't a future trend, it's already the infrastructure. Global banks use it for credit scoring, insurers use it for claims, hedge funds use it for trading at speeds no human could match. But regulators are catching up fast. New frameworks around the world now require companies to prove their AI is fair, explainable, and controlled. That means every financial institution using AI now needs someone who can prove it's safe, legally, ethically, and financially. This isn't a niche compliance job anymore. It's becoming a core function, as essential as a CFO or a Chief Information Security Officer. The companies that get this right will move faster, with more trust. The ones that don't will face fines, lawsuits, or collapse. This role is emerging inside the institutions that can least afford to get AI wrong. Major global banks are building entire AI governance divisions from scratch. Insurance companies are hiring risk specialists specifically for algorithmic underwriting. Regulatory bodies and central banks are creating new departments just to oversee AI in finance. Even fintech startups, the companies building the fastest, are hiring risk assessors earlier than ever, knowing that trust is now a competitive advantage. This isn't a job with one employer type. It's a job the entire financial ecosystem now needs simultaneously. This role is for people who like structure, not chaos. If you're the person who reads the fine print, who asks, "But what if it fails?" before everyone else moves on, who feels more energized solving a complex problem than executing a repetitive one, this might be your lane. It's for former analysts who want more influence, for compliance professionals ready to work with cutting-edge technology instead of just paperwork. If you're looking for a real hack to the future, then visit Mnemosis.com. Learn more about this role and build your tomorrow by taking action today.